Just in the past half hour, the Finance Ministry posted on its website that China has decided to lift tariffs on cars and car parts coming from the United States. Most of the items are going to be seeing a tariff lift of 25%. There are a couple of items on that list of 211 that are going to get a 5% lift when it comes to the tariffs. Now, that decision is going to take effect as of January 1st and be in place for 3 months. So this all comes at a time when China's economy is slowing down and facing a lot of headwinds because of the trade war. The November data was extremely disappointing to many investors here. In fact, a lot of them missed. So retail sales missed, industrial output also missed. And in terms of the retail sales, this was the slowest growth that we saw out of retail sales since 2003. Also, industrial output expanded the least in nearly 3 years. Fixed asset investment got a little bit of a tick, but that was only because the numbers earlier in the year were so weak. So there are a lot of concerns about this. I mean, of course, part of the slowdown is because the government has been engineering it this way. But at the same time, all of this bad news, the trade war, other economic conditions domestically have been weighing on consumers' minds. Now, the China Statistics Bureau said so far the impact of the trade war has been minimal, but they also said that they expect greater external uncertainties in 2019. So that's just been raising a lot of questions as to what policymakers are going to do next. The PBOC, the central bank here, the governor had said yesterday that they expect to have their monetary policy quite loose for the time being. Also, next week, all eyes are going to be on a big policy-setting meeting that takes place every year in China. All the bigwigs are going to be there to draft a plan for next year. And of course, there's a concern that the economy is going to cause a lot of these policymakers to prop up growth with much more stimulus than needed. But as of right now, the policy has been to stimulate with certain measures, but also have those measures be targeted because the policymakers here are aware of the dangers of rising debt. Guys?
Hey, Eunice, before you go, in terms of just the economic impact of these tariffs, in terms of on automobiles produced in China, meaning what kind of pushback do you hear from the people in the automobile industry in China about these tariffs or the relaxation of the tariffs on U.S. imports?
Well, a lot of people here, when they talk about the tariffs, say that they really don't have a significant impact on, say, GM's business or on Ford's business here. Because a lot of the production and the sales are all done locally. So when people talk about these tariffs, usually they'll say, well, the tariffs, if they're lifted, could be good for the German car makers. So BMW, for example, has a plant in South Carolina. They ship cars over here. And so it's more the German car makers that would benefit from this decision by the Chinese to lift the auto tariffs. Still, I mean, it could be seen as something that many people would think is positive in that there's a lot of concern among consumers that the trade war is just going to be, to deteriorate. So the fact that the Chinese have been lifting or made this decision to lift the auto tariffs could be a positive sign that maybe the situation will ease up.